let's move on to our conversations that will shape this evening. We'll first talk about how India is on course to become a $10 trillion economy by 2035. That's what the study by Center for Economics and Business Research has shown us. And we've seen that household financial savings that deepen, and India occupies a larger share of global investment portfolios. So the question is no longer whether growth will come, but how investors can participate in it, and can capital markets fund that journey? And are there investment opportunities that investors are still underestimating? So to explore this conversation, may I request Nalin sir to come back on the stage. And joining him is Navneet Munot, who's the MD and CEO of HDFC Mutual Fund. Let's welcome them with a huge round of applause.
Thanks very much, Lavisha. Navneet, pleasure to be here on the stage with you. And as we were talking just before we got in here, we are roughly at about 4 trillion as an economy now, depending on what the exchange rate of the day is. And every day we go up one rank or go back one rank. But to get to 10 trillion, say by 2035, in that time period, what are the 2 or 3 things that we must get right from where you sit?
First of all, thank you so much, Nalin, to you and Moneycontrol family for associating with us for this thought leadership event. This is the 5th one, and I really like the title this time, Innovation to Impact. And for us, where we are driven by a huge sense of mission, wealth creator for every Indian, the impact part is very important. And we were all inspired by Mr. Manoj Kumar when he said that we need to take the journey from 50 million investors to 500 million investors, and our industry is determined to move in that direction. I think in India, the biggest thing about going from 4 trillion to 10 trillion or then 20 and 40, it's not about moving from whatever we were 10th largest, now 5th largest, to 3rd and 2nd largest economy in the world. It's not about moving from $2,500 per capita to 5,000, 10,000, 15,000. It's not about India moving from 6th or 7th largest market cap nation to a 5th, 3rd or 2nd largest. I think the biggest differentiation about India's growth story with any other story in the history of humanity is that our growth will be democratic, sustainable, equitable, and inclusive. In one breath, you cannot talk about these 4 words for any country in the history which has gone from a frontier to an emerging to an emerged to a developed country. So India's journey from where we are today to a developed country to a $10 trillion plus economy will be democratic, sustainable, equitable, and inclusive. And that makes the biggest difference between us and anybody. We will not destroy the planet the way every other country which grew in this manner. We won't do to humanity or to the future generation, won't borrow so much from the future generation, which many other countries have done, and we are doing it in a highly inclusive manner. And particularly on the inclusion part, I think the financial inclusion is going to play a very, very big role in ensuring that in that the journey from 4 to 10, the fruits are shared with a larger number of people. The recent events in last couple of years, be it the COVID, where we faced like lots of challenges in terms of supply chain, whether it was the Russia-Ukraine crisis in 22, or the trade war and its implications on rest of the world, some of the technological changes which are happening. I think what we need to work on in next couple of years is what I call the 5C, where we become more Atmanirbhar. Number 1 is crude oil and natural gas. Second C is chips and semiconductors. Third C is critical minerals, chemicals, and fertilizers. Fourth C is components, from solar cells to auto to aircrafts. I think there are several components where we are hugely dependent on some or the other country or defense, where we need to get more Atmanirbharta. And last but not the least is the C is the capital. While the domestic mutual fund industry, thanks to support by the regulator, policymakers, and people like you and our distribution partners, we have really grown, where the SIP book has grown from 3,000 to 30,000 crores, 35, $40 billion of consistent supply of capital is giving a stability to the market. But given the humongous investment need, this need to be taken to a much higher level. While the first 4C, the crude oil and natural gas, chips and semiconductors, critical minerals, chemicals and fertilizers, and fourth is the components where we need to get more Atmanirbhar and be less dependent on others. But on the capital, I think we need both. We need to mobilize more domestic savings and channelize them into productive investment on one side. But given our investment need, we'll need a lot more foreign capital going forward also. And for that, how do we increase the absorption capacity of the economy and create a conducive environment? And I've coined this term like inevitable India. How do we present ourselves to the rest of the world that for both talent as well as capital, how do we become the inevitable India that everybody would like to come?
So on that last point on foreign capital, we've seen a rough patch recently. We've seen FII outflows. We've seen a real issue there. So what would you like? What is your reading of it now, and what needs to change to get FII flows back into India in the way that we saw until a year ago?
I think people talk about the valuation, taxation, many other aspects, but in calendar year 23, they were net buyer. Calendar year 24, if I remember correctly, they were net buyer. But of course, if you look at a block of 5 years, foreign portfolio investors since 2021 would have sold like $38 billion. In the same period, domestic institutions like ours would have deployed like $270 billion. But as I said that, I think given our humongous investment needs, we'll need more foreign capital going forward. I think recently we have seen policymakers taking some measures on looking at the taxation on investments in the government bonds.
The GSEC side.
Post that, we have seen the foreign investors investing. Maybe there is this whole AI trade, which is like, kind of like gobbling a large part of the global capital. At some stage, I'm sure people would find relative value in India. If we continue to remain on the path of reforms, if we continue to ensure that we deliver returns to the investors, I'm sure at some point in time, the foreign portfolio investors are likely to return on the equity side as well.
So you remain bullish on India?
In fact, there are two reasons for which over a 30-year period, their ownership went up from 0 to 24% of the market and almost half the free float. First was the structural macro and growth story. I mean, a predictable policy environment, democratic environment, rule of law, and a growth from a very low base. The second was a micro opportunity of stock picking, that India is a country where you get large number of high quality businesses run by very credible management, good governance, good disclosures, capital efficiency, so on and so forth. My view is that for a global investor, the third dimension that should make India more attractive than any time in history is the consistent flow of the domestic investors. Because what the SIP flows are doing is reducing the volatility of the market on a structural basis. So on a risk-return spectrum, I mean, if you look at the efficient frontier, the Indian markets should actually become more attractive because of that reason going forward.
So let me push you a little bit on that. On domestic investors, of course, they've been holding up the market for a while now, at a time when the FII flows were going out. So does that mean that the Indian markets have generally matured, which they have to some extent? Or are we just one big global shock away from finding out that it wasn't as durable as we thought?
So you said,
so I'm saying that with the domestic investors are the ones who've been holding up the market for a while now in ways that much more deeply than before. Now with the FII flows, outflows and so on, does that mean that the Indian market has matured a lot more? Or are we just one more big shock away from finding out that things are not as strong as it looked like? So what's your sense of this on the long-term sustainability of this?
I think industry has worked very hard. I think the reasons people ask me like, what has happened? Why, I mean, from 2 crore investors, we moved to 6 crore. Why the SIP book, which was 3,000 crores in 2016, has moved to 30,000 crores? I think the reasons are, I think it's a track record. I mean, we just talked about HDFC Mid Cap Fund, 20-year track track record. We have a couple of funds like FlexiCap and All Balance Advantage, which have been in existence for 30 years. Investors can see, despite all the volatility and ups and downs, what returns they've given over a 30-year period, over a 25-year period. Number two is the transparency, and thanks to the regulator, we have made this product so transparent. The kind of disclosures we have, the way we have made this product so investor-friendly. The third is a technology which is playing a very big role in whether the investor education, investor onboarding, portfolio management, so on and so forth. And last but not the least, the training. I mean, just to create this acronym of 4T, the training is the investor education. And together, this has created increased trust among the investors. And I think to me, the journey has just begun. I mean, look at the overall household balance sheet of $14 trillion. Only 6% is in equity, 50% is real estate, 15% is gold, 15% is deposits, remaining is insurance and provident fund. The equity allocation is still very small. I mean, you talked about $4 trillion economy, 20% household savings, $800 billion. In couple of years' time, and hear this number, in couple of years' time, annual household savings in India will surpass United States, the household, because their savings rate is lower on a larger size of the economy. Our household savings in the next decade, annual household savings will be higher than United States. And imagine what it has done in last 40 years, the 401k, what it has done in last 40 years to the US markets, and what SIP can do to Indian markets, Indian entrepreneurship, India's capital formation, and India's economic growth.
So, Navneet, there's been an entire generation of Indian investors who have only seen large periods of growth, right? And for whom these troughs that we are now seeing are absolutely new. So, from where you sit, you run the third largest fund in the country. Where so do you sit? How do you see this?
So I must compliment and congratulate this generation. My grandfather lived in a country where India had to import wheat under PL 480 from United States on humanitarian ground. My father lived in a country where we were dependent on foreign grant for subsistence. I lived in a country where every entrepreneur of India had to go outside India to raise any kind of capital, whether as an angel funding or debt or equity. My son is living in a country where a Korean company is raising capital in India. We should be proud about it.
Let me ask you, I want to go back to the FII question. What will it take to get FIIs back in India? I mean, beyond the general stuff around the long-term India story, specific measures, if you could outline from where you sit, which you think will help FII flows back?
I wish it gets a little more media attention. I think the work that has been done by SEBI in last couple of quarters for the foreign portfolio investors, they demand on relaxation on the block window for large trade execution. They demand on closing auction. They demand on netting of settlement for the securities. They had to put like 1 day of the extra funding, and easier onboarding. The 4 big demands from SEBI have been met. Of course, they also have a demand for favorable treatment on the taxation side, which I think, if I've heard the finance minister right, they are open to listen to any other demand from the foreign portfolio investors. Yeah.
So, something you were saying about the household. So, the share of equities in mutual funds in annual household financial savings has jumped from about 2% in FY12 to somewhere around 15% now. Bank deposits have shrunk in relative terms. So how central is this shift to this idea of building a $10 trillion economy? And what happens to the math if a long bear market shakes sort of investor confidence?
The transformation in India from a nation of savers to a nation of investors is not only an economic or financial trend, it is a social and cultural trend. For thousands of years, your retirement security was your kids, that your son or daughter will take care of you when you retire. Now the change in the demographics, the change in the society, the change in the culture is leading to, this is the first generation which is starting to feeling about, I need to create a financial freedom by investing in a disciplined manner. This I call the India's 401k movement, like 1980s in US. The mutual fund industry in US started in 1924 with MFS, but it took 50, 60 years for it to mature to a stage where people took faith that I can invest for a couple of decades during my accumulation phase, and over a period of time I create my security. These are like very very early days of financialization of savings in India. The other, which is, so we talk about the formalization of the economy, the digitalization of the economy, digitalization of finance, financialization of savings, are structurally very big trend. But another interesting trend is the financialization of assets. We have seen this in gold and silver ETFs. You are seeing that in REITs and InvITs. So the real assets, be it commodities, be it real estate, be it like commercial real estate, be it infrastructure assets, they also getting financialized and tokenized and fractionalized and owned by smaller people. These are like real big trend for the asset management industry, and this is just the beginning.
So the question that Mr. Manoj Kumar asked, which was 5 crore से 50 crore कैसे जाएंगे? What is your answer to that question?
No, sir, हम तो साथ में काम कर रहे हैं. So I had the honor of being the chair of MFI. Now board member Sandeep, our current chairman, is here. We work hand in hand with the regulator. When we travel outside India, you hear about how people kind of complain about their regulator. In our case, it's completely different. In our case, we take deep pride in the handholding by them, in the active guidance by them, in the active nudge by them. There are very few places where the regulator drives you to do more for excellence, for being so investor friendly. And I think several of the measures of SEBI has led to the growth of the industry. So our answer is that keep inspiring. We are determined, and together we want to be the wealth creator for every Indian.
So the SIP stoppage ratio, it crossed 100% in April, I understand, meaning more accounts shut than they opened. So it's eased to about 95% in May. Is this an early warning signal or just normal? What is it that you see in this trend?
I think we have worked very hard in MFI to ensure that the data that you are seeing, the two data, number one, the 30,000 crore amount which is coming, this is the money in the bank which people have deposited on account of SIP. And the number two is the number of accounts which have deposited, that number is 10 crore. And you can see the increasing trend in both amount as well as the number of people who have been depositing that. There can always be somebody switching from one particular fund to another fund, or moving from one fund house to another, and maybe they are like shifting, but structurally, over a period of time, the trend is amount is increasing and the number of people who are depositing that amount, they are increasing.
So in terms of the money that people are investing, in terms of the investment classes, whether it's the old mix of gold, real estate, deposits, equity, how do you see that changing in the last 2-3 years, and what's your prediction, say, for the next 5 or 6 years?
So people were under allocated in equity, which is what is increasing. Within the equity, I think there's still as many investors who have invested in mutual fund. There would be equal number of investors who have invested in equity market. Either they participated in an NFO, or they are doing an F&O, or they have bought stock. There are like equal number of people. I think for the industry, that's the next target of the investors who already participated in the equity market. But our message is the better way is to invest through SIP in a mutual fund.
So tell me about how does AI fit in the world of asset management from where you sit? How do you guys use AI, and where do you see that going specifically for your fund?
AI, you're talking about artificial intelligence or aspirational Indian? For me, AI is also aspirational Indian. AI is transformational. I write an annual letter. This was my person of the year in 2022, 4 years back. This is one of the most transformation force that humanity has seen. This is as big as agriculture revolution, industrial revolution, information revolution. This is intelligence revolution. I mean, machines thinking on their own. This is something really a paradigm shift, and we really don't know where it ends, because human brain thinks in a linear fashion, and this is the progress here is non-linear. So for us, it's very difficult to even fathom or visualize what it will do over the next couple of years. So structurally, there are a lot of opportunities for our industry, whether in terms of concession, whether looking at large set of data and doing the summarization, whether there is synthesis of a large amount of data and making sense of it, in terms of content generation and making it easier for us to, educate large number of investors in multiple languages. India is a country of multiple languages. We are doing a lot of things on that. On the client engagement, I think you can do personalization at scale, which would not have been possible without AI. And last but not the least is like, you can do coding in an accelerated manner, that instead of a linear, a lot of process engineering, a lot of innovation can be done in an accelerated manner. But of course, one needs to ensure that the security aspect of it and the data localization, etc., we need to pay attention to that. And how do we ensure that there is a lot of Indian innovation there rather than just using some of these models? Yeah.
So one of the reasons why people say that FII has moved out of the Indian market is because the lack of AI stocks, right? And there's also the big debate about the AI bubble, if there is one. Where do you sit on this debate?
Nalin, you are a global thought leader. So if you think about, if it is about AI, then other than United States, which is at a cutting edge. So India is not there in the energy layer, infrastructure, chips layer, infrastructure, models, I think LLM, we are not there. But on the application side, we'll be the use case capital of the world. But other than United States, who's been at the cutting edge of AI? Which country? I'm asking you.
Well, I'd say China.
It's China.
Absolutely.
Look at MSCI China versus MSCI India in last 1 year. China has underperformed India. Look at YTD this year. Despite all the AI talk, if AI was the reason, look at some of the Chinese stocks which are at the cutting edge of AI. What has happened to them relative to India? I don't think it's about the AI alone.
But do you think that we are heading to the AI bubble?
If I remember correctly, Anuj would have those numbers more handy, but I think MSCI China is 10% behind MSCI India YTD.
So one last question. How, in terms of cyber threats and ransomware threats, which have become much more acute in this, in the age of AI, how acute is this now from where you sit, and the kind of measures that you're taking to guard against that?
I think even finance minister, when she was here for the SEBI Foundation Day and a couple of other events, have mentioned about the risk from some of these models. And I'm sure government, policymakers, civil society, everybody and organizations, everybody is working together to ensure that increased risk from whether it's a cyber security, whether the ransomware, etc., how as a nation, as a society, we counter that. Yeah.
Navneet, one last question. You manage a lot of people's money on an enormous scale. What is your personal guiding philosophy on fund management, and how has that changed from earlier in your career, if it has changed?
I'm a hardcore Gandhian, so he says the future depends on what you do today. And you talked about like all India by 2035 or India 47. I think it all depends on like what we do today. And at HDFC AMC, we get driven by one mission, which is wealth creator for every Indian, to be the wealth creator for every Indian. We manage money. It's a deep, with a lot of humility, and it's a deep pride that we manage money for 17 million people. It's such a blessing, such a great responsibility and honor to do that, a privilege to do that, but we want to take this number to a greater level. So how do we make more money for the 17 million investors, and how do we get the next 170 million investors and make this nation where it deserves to be?
Thank you very much, ladies and gentlemen. A big hand for Navneet Munot.
All right. Okay, thank you, Navneet and Naran sir, for those insightful context to this particular session.